So you have very little money or maybe no money at all, and you're wondering, can I buy a house? Hi, my name's Scott Hastings, and I'm a loan officer. I'm located in North Carolina, right outside of Charlotte, but I lend in North Carolina, South Carolina, and Florida. And I get this question from a lot of new homeowners. So the answer to can you buy a house with no money is yes. And there's a number of different ways. The first way, of course, is if you are a veteran and you can take advantage of your VA benefits. And one of the best ones is that you can buy a home using the VA loan with zero down, 100% financing. It's really the best loan in America. And really a tip and trick on that loan as well is if you have any amount of service related disability, you don't have to pay the VA funding fee, which I can talk about that in another video, but it's a great benefit. So let's say you're not a veteran, but you still want to buy a house and you have very little money in the bank. So there are down payment assistance programs available here in North Carolina and really probably every state. Um, we have one, for example, that is available in every state, and it does not have an income limit. In other words, a lot of down payment assistance programs for whatever state you're in, like here in North Carolina and South Carolina, there's an income restriction. So if you make over a certain amount for those state programs, then you don't qualify. This particular one I'm talking about doesn't have an income limit, and it is particular to an FHA loan, but in general, you can get a mortgage up to 96.5% of the purchase price of the house. For easy math, we'll just take $100,000. So in this example, the mortgage amount would be for $96,500, and then the program, the agency that sponsors this particular program, would quote unquote give you the $3,500 difference in the purchase price as a down payment. That $3,500 portion would have no interest rate and no payment. Of course, the first mortgage for $96,500 would. But that would be a way to get into the home and not have to put any money down towards the purchase. Now, one of the tips and tricks that we use with a realtor partner and with a willing seller is that the seller is allowed to pay with an FHA loan, for example, up to 6% of the sales price in closing costs. So whenever you buy a home, there are going to be closing costs, even if you don't have to put any money down on the purchase price. So the closing costs are going to be made up of, the fees to the title company or to the attorney that closes the loan. There's going to be a cost for an appraisal to, make sure the home is worth what you're paying for it. There's going to be fees to set up your escrows. The escrow is each month when you make your mortgage payment, a 12th of your homeowner's insurance bill and a 12th of your annual, real estate tax bill is paid with that mortgage payment. It goes into an account so the lender can pay those on your behalf at the end of the year. But when you close on a mortgage, you're going to have to set those accounts up with about 15 months worth of homeowner's insurance and about 3 months worth of real estate taxes. So those would have to be paid at closing. So all of these could add up to, well, who knows? But the seller, if your agent can negotiate this, could pay all those closing costs for you, up to 6% of the sales price of the home. And this is something I've done over the years, many times. So again, you basically have no money. You would get a mortgage with a down payment assistance program to where you would have the mortgage portion covered. The agency that sponsors the down payment assistance program would give you or loan you the actual down payment portion with no interest and no payment. The seller of the home would pay your closing costs, and then that's how you move in with no money out of pocket. There are other examples. If you want to live in a type of rural area, there's 100% financing on a USDA loan if you meet certain, those do have income restrictions depending on the county that you're in. And then it would have to use the same strategy to where the seller would pay your closing costs, but done that many times as well. So I won't make this a long-winded video. Again, my name's Scott Hastings. If you have any questions, please put them in the comments below, or you can go to my website, mortgagesbyscott.com, and I'm a loan officer, so I'd love to help you get pre-approved. Thanks for watching.